homes listed for sale in Spokane County. Multiple listings. This area is 10, 20, 30, 40. It's half acre or less, and it's everything. No price differences. So again, back in August of 2000, or in 1999, in August, we could have gone out and showed about 3,100 houses. Okay? And so each month I take a number, or each month I take a count, and I graph that. And you can kind of see what happened the next year. In just 1 year, in August, I could only go out and show 2,500 units. So that was almost a 20% drop or so in amount of inventory to show. And as the inventory drops, your appreciation begins. So I don't know if you guys remember 2001, 2000, 1999, but there wasn't a lot of activity. We were doing about 4,000 to 5,000 unit sales. Vacancy rates were around 7 and 6, and they're dropping down. It's much like how it is now. But again, that was 10 years ago, right? There's 2002, 2003. You can see what happened in 2003. Things really kicked on. 2004, 2005, and we were on fire. These months when we had under 1,600 units, or around, this is actually under 2,000 if we want to take the number, is when we started seeing appreciation. In 2003, we first started seeing the biggest amount of appreciation was between 5 and 8%. And what we're saying is that maybe it wasn't appreciation, maybe people are just buying more expensive houses. They were more confident. We had a lot of people moving up from California that were cashing in their chips down there and moving up here and buying twice the house for half the price. Same thing in 04, same thing in 05. But that inventory, we had enough people moving into Spokane that sucked up that inventory and nobody was leaving. Ordinarily, the years prior to 1999, 2000, we had a lot of people leaving Spokane to get jobs. Then finally in 2006 we started seeing a change, and then 2007 we started to really see that change. 2008, 2009 mirrored 2008, and then there's 2010, right in the sweet spot. We're right back in the area we were in 1999, 2000, 2001 periods. But the difference is, you guys, when you really think about it, that was 10 years ago. We had 10% less population. We had 10% less households. So proportionately, this is a key take-home right now, is the proportionate amount of houses for sale versus the inventory that's out there is probably less, even though in November we were showing around 2,700 units. But if you really take a look at the percentage of total households that could be, that are built, it's actually less than it, because there's a 10% variance. Does that make sense? Okay, good. So that's your take home. So when people say, hey, there's so many houses for sale, well, really not really. It's similar to what it was in 1990 if you're just using numbers. But when you use a percentage of households, it's less. In 1999, 2000, it wasn't that bad of a year. They weren't bad years. They were just balanced. Yes?
What was the interest rate in 99?
Oh, good question. It's around 6. It was around 6. 6 and a half. Yeah. Yeah. Now here's my graph. Every month we get a printout of what the median sales price for closed volume was and the average sales price for closed volume. And we started doing this back in December of 2000. And you can just see this kind of float along. But if you blur your eyes a little bit, you'll see this kind of upward motion. Then in January of 05, things really started hitting the fan, and you can see how that jumped way up. And then look at that. Then about July 08, 07, things started kind of to flatten out. And then if you got to kind of blur your eyes, you got to try and make that into a line. It dipped down. Now look what's going on. we're picking back up, it looks like. I think what we're seeing right there is back to what it was in the 01, 02, 03s. It looks like we kind of pushed through that surge, that our correction may have already taken place. Now, sure, we're still going to say, hey, we got to get those prices down, and it's going to be hard to sell this, but I can say that it looks like whatever we went through is pretty much reversed, and we're back on track to normality. What do you guys think? I mean, it's right. It's just in the numbers.
I hope you're right.
Neil,
Yes.
the economists are saying that the average person is going to be spending about $100 more this Christmas for purchasing. So they're saying that the economy is actually turning around. We're up almost about 7% over what we were last year as far as purchasing. So I think that purchasing thing is going to be
Gets that money
rolling into car sales and then also into
Yeah, we're hearing that, so we'll see. But it's job growth, right now. Property management is up because people can't buy; they have to rent. People can't sell their house; they rent their house. So I kind of liked it when it was 67% of our county owned homes. That might not be that anymore. It may be dropping down to 63, 64%. And so there's a 2-3% shift of ownership to rentership, I guess. Is that right? Ownership to rentership?
One thing on that chart, if you take out the hot years,
Yeah.
that's gonna bring those trend lines down, and take a look, it's almost perfectly in a straight line if you eliminate that uptrend.
What Mark is noticing, if you just kept following this, you're probably gonna hit right in track with normality again. Yeah, good point. Good point. I always like to talk about the interest rate correlation, and this is still from last year, because our interest rate, basically, the red line is interest rates. Your question was, in 1985, we were looking at around 14% interest back in 1985. And then in the 2000 period when you asked, it was right in this area, which is actually around 6, 7, 8. And then it dropped into the 6s, and now, I mean, it's going to, the end of the year, it's going to be at about 4. Home sales is the blue line. It's going to be down in the same area. Average price, we're also going to see that correlation down. But generally speaking, when the interest rates are bouncing around, you don't really see a real big, we have really never seen a big change in people buying or selling. People buy because they have to. They need a place to live. They buy because they got transferred in and they have kids. Whatever their deal is. It's not. Obviously, if interest rates are so low right now as they are, we should see a huge spike in people buying. If the correlation is, lower interest rates, more buying, and vice versa. But there's really no correlation. It's more of a, I need a house. I need to buy something. So it's a little bit different mindset. This is a number I want you guys to really pay attention to. In 2006, the county posted a 1.6% population growth. In 2007, 2% population growth. If we go back and look at our slides, and you can look at how many permits we're dropping, and if you figure we got around 180,000 households, and let's just keep the numbers simple. If there's 180,000 households and you have 1% population growth, you should have 1% household growth. If you have 1% household growth, you should be permitting about 1,800 units. 180,000 households, 1% population growth, 1% household growth, 1,800 units. In 2007, we had 2% population growth. Keep in mind we have 180,000 units. So we should have been building 3,600 units. In 2008, 1.4% population growth. We should have also been building around 2,400, 2,500 units. 2009, 1.4% population growth. Again, 2,500. If we think back on those slides, we were only permitting 1,800 units, 1,700 units. Yet the population is continuing to grow. And that's 2010 looks like it's around 1.1% population growth. So we're always above 1% population growth. We're building the same equivalency of 1%. We've been building for the past, or permitting for the past couple of years, less than 1% population growth figure. So there's gonna be a point. And that's where you kind of see that vacancy rates in the rentals. If you saw that line starting to drop down, you're starting to see the houses starting to get filled up, stuff starting to change. And I think we're seeing that change. We're seeing that change on median prices and average prices. We're seeing the stabilization. We're seeing the vacancy rates dropping down. Seasonally, our listings always drop down as we go into the winter time. But I think we're going through this, and we're coming out of it, and we've essentially made the corner. We just have to hunker down and ride it out until spring to see really what happens. But the market is lining up correctly. So each year is maintain at least 1% positive population growth, which would translate to household growth. The takeaways, so this is kind of the summation of what's going on from this particular meeting. Positive population growth, house construction at or below pre-1990 levels, back when there was 20% less population, back when there was 20% less households. Vacancy rates are dropping, even as apartment construction remains level. That's a good indicator that households are being created, and they just haven't spilled over into the single-family market yet. Average and median prices are stabilizing, as evidenced by that big drop, and then it started coming back up again. Home inventory is at levels similar to 1999-2000 as a percentage of homes that are for sale per the whole population. So we are seeing some good things. So unless you have any questions,